Is Compass in that same category of disrupting the real estate industry?
I don't believe so.
How's it going, everyone? Welcome back to another episode of the Shawn and Matt Show. My name is Matt, that is Shawn, and welcome to our show. Shawn, in today's video, we're going to be talking about the Compass IPO. It's happening right now. The dial is going up and down on COMP, the ticker. And we're also going to be talking about a house in our local market that is making national headlines that received 88 offers, 76 of them being all cash offers. So we'll get into that, but first, let's start with the Compass IPO. And this was, I called it the worst kept secret in real estate, that Compass was going to have an initial public offering and become a public company, and it was just a matter of time on when they were going to do that. Q1, and I guess we're now in, Q2, the first day of Q2 is when they decided to do that. And you know, the interesting thing is that it started at a higher price. Valuations were a little bit higher in terms of the shares. They had anticipated starting around $23 to $26. They cut it to $18 to $19, and then it came on the market, if you will, at $21.25 per share. What are your initial thoughts on Compass becoming a publicly owned company?
I mean, I think it's good. They actually dropped the amount of shares as well, which put its valuation at a lower point. You know, I'm not an expert in stocks and IPOs and all this stuff, but, you know, I think what this does is two things, right? Is the market ready for another, you know, IPO, another real estate company? Is this a real estate company? And I think the argument is this just another real estate company, or is this a tech company? And if it's on the tech side of things, then that valuation could go up. If it's just another real estate company like Realogy and all these others, then that valuation could come down. But it's telling at first to see that the price actually dropped and the amount of shares dropped. Investor fatigue, maybe, I don't know. But what are your thoughts?
Yeah, you know, my thoughts are, so real estate companies and I guess tech companies, and I would be more specific, tech-focused real estate companies like Zillow in particular have absolutely skyrocketed in terms of value in the past year.
And I think there's something different to offer there, right? Whereas Compass, I mean, it's a great company, and I know that they have a lot of tech things in there, but it is your more standard real estate company. They're buying up a lot of these other smaller companies that will help them get from, you know, the whole real estate experience through, right? And I think that's what everybody in the market right now is trying to achieve, is from refinancing through title, through everything. And, you know, that's the goal. But are they a tech company or are they a real estate company?
Well, the biggest thing is, how is Wall Street going to classify them now? Realogy, they're trading at about $15.27. Their market cap is about $1.7 billion. And I think the biggest tech-focused companies are Zillow, they are EXP. And, you know, it's up in the air whether you want to throw Compass and Redfin into that equation, because some people will tell you that Redfin is more of a traditional broker in the sense, because when it talks, you know, Wall Street and venture capitalists, there are these companies and brokerages out there that are raising hundreds of millions of dollars, and no one's even heard of them.
Yeah.
So venture capitalists, VCs, they love disruption, but are they getting, I don't want to say greedy, but is Compass disrupting the industry? Because I would think that EXP, and I don't work for EXP, they're disrupting the industry because they don't have any office. It's all virtual and everything is done online. Is Compass in that same category of disrupting the real estate industry?
I don't believe so. I think they're more of a traditional model. I don't see anything that is a disruptor in them. I agree with you. EXP is different. There's no offices, right? Redfin is different because they're a discount brokerage. Zillow is different because they stole all of our information, right? No, Zillow is different because, you know, they started this awesome website and then became the brokerage. So Compass started more as a traditional company, and they did a really good job on recruiting, and they do have a lot of good systems in their background, and they've done, the good thing about Compass is they saw real estate companies and they were able to start on a platform that was brand new, right? So they started from, you know, imagine Realogy, we've been here for how many years and we've had to evolve. Whereas Compass said, all right, we're starting already evolved and we're going to build on that. So they have a good foundation, let's say.
So the big thing for Compass and what Compass agents and I know the CEO said is that you can do everything in-house. You know, the average real estate agent, I think the Compass CEO said, uses 9 different platforms, whether it's email marketing, whether it's direct mail marketing, whether it's getting the sign. And in Compass, you know, they've done a really good job in acquiring companies like Contactually, like KVS Title, where you can streamline things and have it all in one platform. And what we've seen with certainly the branding of agents is when an agent joins Compass, their marketing gets better immediately, and there's no denying that. They take good agent marketing and make them great, and they take great agent marketing and make them even better. Now, some would say that the Compass stamp or the Compass brand, it's okay, I see your just listed flyer. It looks like other Compass agents flyers, but let's be honest, it's still a lot better than a lot of other agents in the marketplace.
Yeah, one thing about agents is that we wear many different hats, as we all know. I mean, there are so many things that we have to do. And let's be honest, when we get busy, some of those things go by the wayside. So if you have an in-house marketing company that's designing things for you, you have an in-house closing company, an in-house like Contactually, all of this stuff matters. And if you can keep it, and we have all these things, but we've gotten them through different systems. But streamlining it for agents and having that help in-house is huge. I know that marketing and hiring a person to do the marketing, you know, we've done that, and it's hard. You have to train somebody, whereas these people already have somebody trained. They know what to do. They're going to design something totally new for you, which looks great. So there is something to be said for that.
Yeah, and what I see is Compass trying to convince Wall Street that having everything in-house, having everything streamlined, having everything under one umbrella is worth it, and that is what is their separating factor, if you will, because I know they white label a lot of their services so they can easily use it and distribute it to all their agents.
Yeah. Now the interesting thing is going to be that, you know, Compass started in 2012. They've hired a lot of agents, and you know, we've seen a lot of agents in our company and different companies go over the Compass route, and one of the things they offer them stock options, but you have to stay in the company for so long. So what I'm interested to see is the longevity of the agents that have gone that route, whether they're going to stay, whether they were just waiting for this stock option to happen. You know, they might have gotten this stock at $14 or whatever, and they had to stay for 5 years to get it. So are they going to cash out and they're going to go somewhere else? Are they going to be profitable? You know, that's the big question.
Yeah, and I don't know the ins and outs. Neither Shawn or I know the ins and outs of the stock options and what agents got their stock at. But I certainly hope it was much less than $20 per share.
Yeah.
And, you know, in terms, you mentioned that Compass has a lot of agents. I believe they have around 18,000 agents. EXP has 50,000.
It's insane.
EXP has more than twice the amount of Compass, and they're completely virtual. Why are they not getting more publicity?
I don't know. Maybe because they are more of the disruptor, you know, and they're keeping it quiet. I don't know. That's a really good question.
So, I mean, the biggest thing is, all right, the splits. Like, are the splits worth it? Is that vertical integration worth it? And, you know, real estate agents spend a lot of time doing things that aren't meeting with clients, and that takes away from the service that we provide, whether it's hanging a lockbox, creating a mailing flyer, or distributing a newsletter or something like that. That's tasks that I believe Compass has taken care of for the agents. So that's a huge value add. So if you have a team that, going over to Compass, that sounds like a pretty good idea, depending on how the splits work out. Now, one other aspect, and I'm losing my train of thought here, but in terms of Compass versus EXP, there's a lot of training at EXP. I'm sure there's some at Compass, but Compass isn't taking on new agents, right? You don't just get your license and join Compass. It's more of like a invite only type of brokerage.
Yeah, I never thought of that, actually. I don't know much about the EXP model. I mean, I don't study these things, and like, this is one good example. I don't have time, right? But as an agent, you have to start dulling off these tasks that you don't have time to do. And I'm doing that now. It's taken me a long time to say, hey, I don't need to be hanging the lockbox. I don't need to be. I knew that, but like I for some reason just kept doing it because that's what I did, right?
Yeah.
And there's a lot of agents out there that still do it, and it's like, now over the last couple of years, I don't do that stuff anymore, and I don't do a lot of the marketing, and I have a hand in it, but thankfully there's other people doing it. And then transaction coordination. I mean, like, I can't believe that people still aren't using transaction coordinators, because if I still had to do all of those emails, there's no way I could do it. There's no way.
Yeah. The real estate agent's value is getting the other side to sign the contract at the highest price possible. The value is not in sending a reminder about the home inspection. Now, certainly the consumer expects that, and that's why we have the transaction coordinator. But if there are real estate agents out there that are sending home inspection reminders and contingency reminders and deadlines and whatnot, that is taking away from those core competencies that a real estate agent should be focusing on, and ultimately they're losing out on future business there.
Absolutely. That's it.
Well, that'll be interesting to watch the Compass IPO. It's still hovering around.
So it's up it's to $21.
Around $21.
So the offering was 18. Is that what that's the IPO? But it always opens higher.
It
right?
opened at 21 and a quarter. It'll just be so intriguing, because I think the initial investors will get their money out, and I always hope for success. Like, I don't, unless well, now I'm just thinking of the all right, so some of the alternative brokerages that maybe have called me out before, maybe not, but maybe I'll cut this part out of the video. This is going downhill quickly, but all that's to say is I genuinely hope for Compass's success, because I do enjoy them as a company.
I do too. I think they're a great company. I wish them success. I hope, because I believe they're more of a traditional model of real estate brokerage. I want them to succeed. I think that this is a push in some sort of normalcy. Yes, they are a tech company. They're really good at that side of things, but they're a good real estate company. I want them to succeed for sure.
Cool. Our next topic is multiple offers, Shawn. In Silver Spring, CNN Business, along with a couple other sources, have reported that a house received 88 offers, 76 of them being all cash offers. Now, the fixer-upper house was listed for $275,000, and by 4 days later, they had 88 offers, and it eventually sold for $460,000. So $275,000 up to $460,000. Shawn, you read the article, you saw it. What'd you think?
Yeah, this goes back to the exact conversation that we had last week about, do you push the price up or do you leave it low? Now, which guy would you rather be? Would you rather be the guy getting 88 offers, or would you rather be the guy that gets 2, right? And so there is a strategy. There's always a strategy to this. And I think this was definitely priced low, but it says a few things. If you got 77 cash offers at $275,000, what's that telling you? That's telling you one thing is the iBuyer market, right? There's a lot of investors out there that want this, and they were just going to flip it, okay? So at 275, there's 77 of them. That's telling you that these iBuyers, these smaller guys that are trying to buy these things and flip them, there's no market right now because everything is being gobbled up at high prices and there's no profitability in it, right? So 77 people threw cash at it. That's an amazing number. And that's 77 people that are going to be competing against the other fixer-upper and inevitably pushing up that price and pushing up that price. You know, it says that there were people in there that were looking to actually put their own equity into it and do it themselves. But in the end, I think an investor got it, right?
Yeah, it sold all cash, no contingencies. Man, I couldn't imagine writing on that with like a home inspection or like a financing. It was obviously sold in as is. It was in terrible condition. And I want to say possibly the appraisal had something to do with the sales price, because renovated homes in this part of Silver Spring, they sell in the fives. Some of them sell in like the mid fives or so. This one needed a lot of work, sold for $460. So, you know, I got to imagine you're going to be putting about $100,000 into it and then trying to get $600,000 for it. But
yeah, and $275. I mean, does that even buy you a lot? You know what I mean? In that area, I wonder. So it was definitely underpriced, but I didn't see the condition of the home, so I can't say. But there's a strategy, right? So what did it do for the seller? It got them an amazing deal. I wouldn't want to be the agent on this, going through 88 offers. I mean, 8 to 10.
I mean, at what point do you cut that off?
Exactly.
You're like, okay, listen, only submit if you're like this price.
That's what I would do. I was like, listen, if you're not at 400 or 450 and above, then don't even worry about it.
Yeah.
You know, at some point.
What are your thoughts on telling agents the price of the offers? We're allowed to do that, right?
You have to tell everybody. Well, you could. At that point,
just tell everyone.
On these, like on something like this where it's just insanity, it's like, I think you have to.
Why are agents so against telling the price? Just email everyone. This is the best price we have. If you want to reconsider, great. If not, great.
Yeah. I don't know. I've never really done it that way.
You're like, I can't tell you the price.
Yeah.
Yeah, you
it's
can.
True. Yeah, you can. You just have to tell everybody the price. I don't know. Some agents feel that they're being slighted in ways, you know, when you tell them what their offer was and you try to beat. So I can see it both ways. Sometimes I feel a little bit uncomfortable giving all that information out. So I can see it both ways, but you're working for the seller at that point and you're trying to get the highest price. But this goes to show you that underpricing sometimes works. And I mean, I think it's showing you that this market is just stupid.
Yeah, and this is an article on CNN.com, and it looks like it's kind of positioned as a scare tactic. The article is entitled 76 all-cash offers on one home. The housing madness shows no signs of slowing. Now, there's two very important things. First of all, this is not normal. 76 offers on a house, 88 whatever offers on is certainly not normal. However, it is normal to see 10, 20, 30 offers on a house. So, you know, we got to be sure that we're not completely scaring everyone away here.
Yeah, and exactly. Don't think this is the norm. And the cash offers, this is a lower price for this area, right? So $275,000 isn't a lot of money for this area, and a lot of people have that cash. So don't be scared by it. I would say that of the last few that we've sold, I really haven't seen much cash. I mean, I've maybe one, but a lot of people now are writing their offers like cash. They're doing it without any contingencies, which is basically cash. If you're using a local lender, then you can close in 2 weeks. What's really the difference, you know? Yeah. But the article also says that wasn't the high. They didn't take the highest offer. So remember that it's not always the highest offer that matters. It's the all cash, guaranteed close, no appraisal contingency, no finance, naturally no home inspection on this. So there were people that beat out the price, but remember, that's not always the deal.
So most of the buyers that we're working with, well, I'll speak for myself. Most of the buyers I'm working with are getting a mortgage. Mortgage rates have increased recently. Low inventory across the board. What should I be telling my buyer clients in terms of low inventory and rates rising? Is now still a good time to buy, or do you think next year, after the summer, after the spring, fall market would be better?
That's the funny thing. And I always tell people, just buy when you want to buy, right? And don't worry about, because, all right, is it better to buy at a higher value now, or interest rate's going to go up and then push those values down? It's such a difficult thing. Buy when you want to buy. Right now is a really difficult time to get in. So if you're putting 5%, 10% down, there's people putting 20% down. There's people with cash. How do you beat them out? it's difficult, right? The magic ball, I don't know. There was another thing I was going to bring up about this.
The rates, the multiple offers, the inventory.
So I always thought, and I always blamed this on the pandemic, right? Because I felt like the inventory was so low for last year, it caused this whole thing because people weren't selling as much and people were still afraid. And I think there is still that fear. But what we're starting to see now is that to start open, because the way that we show houses now is you have a finite time. And a lot of agents are saying you have 15 minutes to go through a house. How can you see a house in 15 minutes? What they're doing is they're allowing each person their separate space, right? Before this, it was like mayhem, everybody go whenever you can go. There might be 10 other people in there. I'm starting to see that open up a little bit more because it's impossible to get everybody through. Like they were saying in this article, we just had to turn people down. They had 15, I believe, 14 offers, sight unseen offers, because they couldn't even see the property. There was just no time to see it. So I think that's got to open. The other thing is, I was blaming this on the pandemic. I still am. I still think that is the main reason. But there's some economists in here saying that really isn't the reason. It's just the low supply. Well, why is there low supply? I believe is because people aren't selling because of, the stuff that's happened over the last 2 years. But I mean, I could be wrong.
Yeah. And I've done a few virtual showings, virtual closings, FaceTime. I guess it's not, well, it is sight unseen because they haven't stepped foot in the house, but they've seen it on FaceTime. So I've done a few of those this year.
Yeah, it's a tough market out there. It's not fun. I mean, we've written offers every weekend. We write offers, and a lot of times we don't get them. It's going to be 4 or 5 offers, and it's a learning process for these buyers. It's a learning process. I lost one. I lost 2. All right, now maybe I'll waive my appraisal contingency. Oh, I lost that one. Okay, now maybe I need to waive my finance contingency. And then at the end, you finally win and you have no contingencies, basically. That's what's happening.
You know what I do with those 15-minute showings? Book 2 of them back to back.
Well, that's good.
You got yourself a 30-minute showing right there.
There you go, man. The smart guy right here. See, sometimes they'll catch you on that, but if you can do it, push it.
Yeah.
And you know what I did this week? There's a coming soon listing that I made an appointment on 2 weeks in advance to get the half-hour appointment.
Wow.
Yeah.
You probably got the best time, Saturday, 11 a.m.?
No, unfortunately, my client wants to see it at 5 o'clock on Friday, but that's what time we got to go.
Dude, that time's going to be open 2 weeks from now.
But, honestly, that 5 o'clock hour is when people start getting off, their work. And so every time I've tried to show at that time, it's been stuck. So now we're doing 2 weeks in advance.
Yeah. I had a showing scheduled in May or April of last year when things were like just getting started in the pandemic, and my client wasn't there. I was just like, hey, I'm going to check out this place for you. And so I did agent preview as the option because I'm the agent previewing it. And the listing agent's like, no, we're not allowing agent previews. And I was like, why not? And she's like, oh, well, if you have a listing coming on in the market, then, you can look at the pictures online. And I was like, no, agent preview, I'm previewing it for a client. She's like, oh, you should have just said that. I was like,
That's what an agent preview is.
All right. Well, we have 2 different definitions for agent preview. So
I guess agent preview could mean
I guess I'm never going to do agent preview again.
I never do
I'm just going to do showing.
Showing.
How'd your buyer like it?
Yeah, they liked it.
We just started. Not for him. Not for her. Cool, guys. Exactly. Well, there you have it. Another episode of the Shawn and Matt Show. We'd love to know your thoughts on the Compass IPO. Not financial advice. Do your own research. Just going to throw that in there. Will you buy Compass stock?
Probably not. Personally, I mean, it's just not my style. But I mean,
do you have any stock interests in any real estate brokerages?
No, not really. I mean, the Zillow one, but I think maybe it's too late at this time. I mean, anything that's going to make me money, I'm going to buy, right? But I don't know that.
What if Compass dropped to like $10? Jump in?
Then I'd buy it. Oh, yeah, definitely.
Jump in?
If I think that's completely undervalued. So, I mean, if you look at Realogy and they're at 15, and something drops below, yeah, I think it's a buy.
Realogy was at a couple dollars last year. I should have got in there.
Yeah, I know. It's a hard thing to know what's going to happen in the market. Yeah. As I've seen so many times.
Well, as I was saying, drop your comments down below with what you think about the Compass IPO. Hit the thumbs up button. Be sure to subscribe if you haven't already. And until next time, we'll see you then.